Good afternoon. At least good afternoon for those on the East Coast. Hopefully those on the West Coast are having a good morning. I'm Jay Polston, class of 1990, and I'm coming from you at 1127 Dewey Avenue at Aquinas Institute. And we are very excited about this webinar today. This is one that is going to help other people, and it involves an alum, and something that we hope that you'll think about, and we're going to have more in the future. So if there's topics out there that you are thinking about taking part in, shoot us an email, let us know. We'd love to hear ideas, because we're fortunate enough that we have a number of alumni with expertise and experience out there that would love to share it with us, and we're very excited about that. So a couple housekeeping details. If you have questions, there's a Q&A and a chat section. We're going to ask that we deal with those at the end of the presentation. We'll work through that. So if you have questions, we'll be able to do that. And if you have questions, I'm sure Vicki will give you contact information to follow up on. So, make sure you look for that. This will be on demand afterwards. So you'll be able to view this again in case you have to step away, or there's something you missed or something you remember afterwards. We'll be able to do that. One commercial for those of you who want to stay connected with Aquinas. Don't forget our platforms. We are on LinkedIn, Twitter, Facebook, and Instagram for alumni accounts. And we have a new one just for Aquinas family and friends and alumni, and that's aqevermore.com. So if you get a chance, please check that out. It is my honor to introduce Vicki James, class of 1991, and she is our presenter today. And I've had the opportunity to be part of known Vicki since high school, but also have been through a couple of things through our networking group that she has participated in. So very knowledgeable, great person to listen to, and at the very least, you're going to learn something. So Vicki, take it away.
Well, thank you very much, Jay. I really appreciate that wonderful introduction. And I was just looking at all of our participants and seeing lots of familiar names, and really excited that everybody's here with us today. And so what we're going to talk about is long-term care insurance. And oftentimes you hear about long-term care insurance and people are like, oh, you're just, trying to protect your assets. Really, long-term care insurance has nothing to do with your assets. I mean, it does a little bit, but it's really about your family. And so that's what we're going to talk about today, is how long-term care and not having the right funds to pay for it is going to affect your family. So if I could just have everybody in the chat box, just let me know, do you have long-term care insurance now? Yes or no? Just quickly, chat it in there, just so I've got an idea of, where everybody's coming from. And then the other thing that I'd like to know is, did you attend this presentation because you wanted to know more about long-term care for yourself or for somebody else? And if it's for somebody else, who is that other person? Because what I'm going to do is, I've got my slides already figured out here, but I want to make sure that we've got this situated so that we're talking about the things that you want to know. Okay. So I'm not going to share with you the costs of nursing homes and aides in your house, but really discuss that whole quality of life for your spouse and children. Okay. We're also going to talk about some hard and harsh situations that, we really hope don't happen. But if we aren't prepared to make the worst situations the best possible, then the worst situations basically just take over. So that's why we're having this conversation today, so that you can take some of that control back into your care as you start to age. So thank you everybody who's been chatting it up. That's very helpful for me. And just a little recap, just like Jay said, I am a class of 91. My business is Medicare Easy and Health Insurance Easy. This is a family business, and the fact that my husband joined me in the business 3, maybe even 4 years ago. We have a fellow Aquinas alum, Christian Valentino. His wife, Kathy, works for us. And then our daughter joined us over the summer as a client services manager. So not only is it a family-run business, but it's also Aquinas family business too. So why, as a Medicare broker, I'm starting to talk about long-term care is because we've had clients who have been asking us for it. But even before that, we have firsthand knowledge and experience of when our clients aren't prepared for the worst in aging. You know, I've had clients where the husband has a wife who's dealing with Alzheimer's, and he's had to actually strap her to the bed so that he could get some rest at night, because otherwise she was leaving the house in the middle of the night and wandering around and getting lost. And so that was the only thing that he could figure out to do to make sure that he was getting rest and that she was still safe. I've had 75-year-old wives who are trying to lift their husbands twice their size from a chair to a toilet or off the floor when they fall. I've had daughters who are caring for their own children and working and driving to their parents' home every night to cook dinner for them and get their prescriptions ready and set out for the next day, and then having to drive home to their own children to feed, bathe, and get them through homework and through the night. And so, you know, these are all situations that long-term care insurance can really help offset, because you can get aides to come in and help pay for somebody to do some of those things so that your family, your spouse, your children can have a quality of life. So what are we going to talk about today? We're going to talk about what is long-term care insurance. What's the evolution of long-term care insurance? When are you going to need it? What are some myths around long-term care insurance? We're going to spend quite a bit of time on that. When's the best time to purchase long-term care insurance? And why waiting too long could be the single most important mistake you make in your health coverage. So I do want to let everyone know Jay is monitoring the chat box. So if you've got any questions, make sure that you're throwing them in the chat box. We'll answer questions at the end, but ask the questions while you're thinking of them. And if we haven't already addressed them, I definitely will make sure we do that at the end. So long-term care insurance. So the traditional definition is that a long-term care insurance policy helps cover the cost of care when you have chronic medical conditions, a disability, or a disorder. You know, it could be something along the lines of Alzheimer's. And then it helps pay for the home aides, the assisted living, the nursing home, the memory care, or the adult daycare. All right, that's the very dry definition of what long-term care is. But the real definition is that long-term care insurance helps keep the quality of life of your spouse, your children, and yourself. And it also keeps blended families and siblings from eroding their relationships. And I'm sure that you all have some first or at least secondhand knowledge of, you know, families that have broken down because individuals haven't thought about what's going to happen when they can no longer care for themselves. And we're going to talk about that a little bit more as we move forward. So the evolution of long-term care, a couple decades ago, especially in New York, we had the New York State Partnership. And there was a lot of plans that were strictly long-term care insurance. And that was the only thing that they covered. And that was something that said, if you need long-term care insurance, this is what the insurance is for, and it doesn't cover anything else. Those types of plans are getting a lot less popular now, but if you already have them, most of the time it makes sense to continue on with that because you've already been paying in quite a bit to the premiums. And so stopping and starting with a new plan might not make financial sense, but we could always have a conversation around that if you're interested. The new plans are more of what's called a hybrid plan. So you'll see either a life insurance plan with a long-term care rider on it, or you'll see a long-term care plan with a death benefit. And so what that just means is if you use the long-term care insurance, you'll get a little bit, to pay for funeral costs and that type of thing back. But if you don't use the long-term care benefit, you were healthy all the way until the day that you expire, then you actually get a larger premium death benefit back. So it makes people feel a little bit better about investing in that type of plan, because you feel at least knowing that your estate is going to get back a lot of the premium that you're putting out there. So when we talk about long-term care, when do we need it? Okay. And so there's a thing called activities of daily living, ADLs. This is a term and an abbreviation that you're going to see all the time. Okay. And so the activities of daily living is bathing and grooming. So that means cleaning and shaving yourself, brushing your hair, your teeth. If you need help with those things, that would be one of the two things that you need to be able to no longer do on your own to be able to activate the long-term care insurance. Okay. Dressing, are you able to get dressed on your own without struggling with buttons and zippers? Eating, are you able to feed yourself? Transferring is being able to walk or move yourself from your bed, from your chair, all of that. Toileting means the ability of getting on and off the toilet on your own, or if you need help, that's when long-term care insurance could be kicked on. And finally, continence. So that's the ability to control one's bladder and bowel functions. And if you lose that ability, that could be another factor that could turn on your long-term care insurance. So remember, you need to have at least two of these on most plans. I mean, you have to check the policy that your parents might have or the policy that you purchase. But for the most part, it's usually you have to have two of these things that you can no longer do on your own to be able to have the long-term care insurance start. And the other thing to be checking on the policy as well is what's the waiting period. So some policies have a 30, 60, or 90-day waiting period. Some of them require you to wait that amount of time, but then they will back pay for the time that you had to wait. So again, it's really important to be taking a look at those policies before you purchase them, or taking a look at your parents' policies to understand what kind of outlay of money that you might need to do during that waiting period, but then what kind of money might you expect to get back. The other thing to understand on long-term care insurance plans is, are they going to require you to hire through a company, or can you pay a neighbor, a family friend, a relative? Those are things to be considering when you're purchasing, and again, when you're checking out the different policies that family members might already have. So we're going to move into the different myths of long-term care insurance, and there's quite a bit. So the first one is Medicare is going to pay for my long-term care. As you know, I am a Medicare insurance broker. That is 100% incorrect. Medicare does not cover your long-term care insurance. What Medicare does cover is skilled nursing. And skilled nursing basically just means full-time rehab, like after a hip replacement or a long time at the hospital. And one of the things that people don't understand either is that you have to be continuously making progress while you're at the skilled nursing facilities. Or if you stop making progress, then the skilled nursing facility is going to let Medicare know, no, this is now turning into a nursing situation. And nursing situations now are no longer being covered by Medicare, and they are now being covered by a long-term care insurance. And if you don't have a long-term care insurance, you're now paying for that out of pocket. Okay. And I do want to just make the distinction. That does not matter if you're on original Medicare in a supplement plan, or if you have an Advantage plan. All of those plans are not going to cover you for long-term care. The second is Medicaid, or excuse me, disability. So my disability insurance is going to pay for it. So disability insurance is in effect to help replace income lost, but it's not going to cover home care, assisted living, or nursing home expenses. Okay, so they're two different insurances. The next one that people talk about is Medicaid will pay for it. Well, yep, Medicaid will pay for your long-term care. However, Medicaid is means tested, which means that basically it's based on your income. And currently, an individual who is single that's over 65 to qualify for Medicaid needs to make less than $875 a month and have less than $15,000 in assets. So it's a lot less than people think. Now, some people will create a trust and do all that. Well, remember, trusts have a 5-year look back, okay? So you have to be very proactive in creating that trust if you want to be utilizing Medicaid for your long-term care plan. However, know that when you are allowing Medicaid to be in charge of your care, you no longer have the control to be able to decide which facilities you're going to go to or which companies are going to be sending in home aides to you. Okay, so the control is completely out of your realm at that point. All right, so the next myth is I'm not going to a nursing home, right? This is my dad's. This is the myth that my dad's always, pounding in my head. I'm not going to a nursing home. If you send me to a nursing home, I have it in my will that, my alma mater in Buffalo is getting all of your inheritance. And, I'm always talking to Dad. I'm like, Dad, thank you. Your inheritance would be nice, but not necessary. And I want you to have the coverage that you need. But a lot of people think long-term care insurance is only going to cover nursing homes, and that's not the case. It will cover in-home aides, assisted living, memory care, and of course, nursing homes as well. So the next myth is I probably won't need long-term care insurance. This is usually the men in the room. Men are always like, I'm big and strong and I'm not going to need health and long-term care insurance. I'm going to be healthy until the day I die. Well, I hope that you are. But what if you're not, okay? According to the Department of Health and Human Services, individuals that are 65 and older have a 70% chance of needing care on an average of 3 years, okay? And again, if you don't plan for how you're gonna get your care, you're not gonna be in control of that particular care. The next myth is only wealthy people can afford long-term care insurance. Well, long-term care insurance is expensive, but so is paying an aide at your home $20 an hour for round-the-clock care. I mean, that's $175,000 a year. And even if you had that coverage where they were only in your house, half that time, it's still $87,000 a year. So offsetting those costs with a long-term care insurance will allow you to still be able to get the care you need and still allow your family members and your spouse to have the quality of life that they need and that you probably desire for them. The other thing to think about too with, that whole wealthy people can only afford long-term care insurance is that enrolling while you're married, while you're younger, and while you don't have any medical issues is going to reduce the cost for you. Last thing to know about long-term care insurance is that it's probably more affordable than you think, and you can spread those payments out often to 10 years. The next myth we're going to talk about is I'm going to self-fund my own care, which, you might have built up your own personal wealth that you can do that, but is that really the best use of your money? Would it be better used if you were investing it somewhere else? Also, you could be at risk for estate taxation. So those are questions to have with your financial advisor about, should I be using my wealth to be self-funding for my long-term care, or should I be putting it somewhere else and buying a long-term care insurance policy? Then we come to the whole, I'll wait for long-term care insurance when I need it, right? A lot of people like to do that one because, again, they don't want to pay for an insurance that they might never need. However, if you wait until you need long-term care insurance, you're not going to be able to purchase it. There is underwriting that goes along with long-term care insurance, and things like, having pre-existing conditions, having multiple prescriptions for a particular diagnosis, your age. All of these become factors, and you might not be able to get a long-term care plan when you actually do need it, okay? So it is one of those things that you need to make sure that you're getting before you need it. And the other thing to know too is that every year that you wait to purchase long-term care insurance, the rate increase, it could be between 8 to 9% every single year, okay? So waiting could make sure that those premiums go way up in price. And then lastly, and this is the very, 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 very most important myth, is my family will care for me. Now, I'm not saying your family's not going to care for you, but what I'm saying is that caring for you could put a huge financial burden on your family and an emotional burden on your family. Okay? Think about this. Is your 80-year-old wife going to be able to lift you off the toilet? Do you want your daughter or your granddaughter bathing you? Blended families, so families that, husband and wife that are on their second or subsequent marriages. You could be putting your wife into a position of explaining to your kids why she's spending their inheritance on your long-term care expenses, or vice versa. Why are you paying for her long-term care and spending their inheritance, right? These are things that we need to be thinking about before we actually need to utilize them, because that could become very uncomfortable for your kids and your second wife. Then the other thing that comes up too is a lot of times is, well, my kids will take care of me. Well, let's think about this, right? How many kids do you have? 2, 3, boys, girls? Are they all going to help? Are they all local? Mostly people come down to it and say, well, my daughter will help me. Well, how will providing care for you affect your daughter's time with her own family? What about her job and the income that it provides? Is she going to be able to care for you and still work? How about, how do you think your daughter is going to feel when she isn't getting the help from her siblings or her brothers? What kind of strain is that going to put on their relationship? And what if the siblings or the sons don't like the decision that your daughter's making? Again, more strain on the relationship. These are all things that create dissension across siblings and needs to be discussed now and not when it's in the stressful situation of trying to figure out how are we going to care for dad or mom because, they can't care for themselves anymore. And that's why having this important conversation right now is so imperative to making sure that you keep your family intact going forward. So when's the best time to purchase? I feel like the best time to purchase is in your 50s to about 65. And so I like to tell my clients, even before they're getting to me, pay off the college loan, get your kids through college first. And as soon as you're done paying for college for them, start paying for your own coverage and your own care. All right. Best time to purchase is when you're in good health. Because again, if you have pre-existing conditions, you're taking a lot of medications, that all could affect how much your premium is going to be, or even if you can get on a plan at all. And again, getting long-term care insurance is essential for second or subsequent marriages because you don't want to put your spouse in between your care and your kids. You just don't want to put that divide out there for them. So waiting too long could be the most costly mistake that you make. And we've talked about this a couple times, but it's really important to go over it again. So again, if you wait too long, you could have a rate increase. The older you are, the higher the premium or the chance of not being able to qualify for a policy is actually a reality. Then you could be medically disqualified. So if you have a pre-existing condition that could disqualify you or delay an enrollment in a policy up to 5 years. And then we talked about this as well, medication ineligibility. So if you have multiple prescriptions for a diagnosis, that could actually render enrollment unavailable to you. So again, waiting too long to decide on doing this is going to affect your rate and your eligibility to be able to get on a plan and your control as to how you're going to be able to get that coverage. And lastly, it's going to affect your family and friend and your family and your children and their quality of life. So just a reminder, this is the end of the presentation, and I'm going to answer some questions, but if you remember anything from this presentation, I want you to remember this. It is about them and your family, and it is not about you. It's about preserving what you see on this picture right here, okay? A plan to handle your extended care needs should they arise, right? You might need them. But having that plan with your wishes laid out in advance with a dedicated stream of funds to help pay for your care so your kids and your spouse will know what to do is what's going to allow them to keep loving each other during this stressful time. All right, Jay, what kind of questions do we have?
We got a number of questions, and also, as I was looking through the attendees list, it is a very diverse age group. I see alum from the 50s up through the 90s. And so I think this is obviously a topic that everyone seems to like. All right, let's go with the first question that came in. And obviously, if you have questions as we continue this, type them in and we'll get to them. Lawrence Latvala, class of 78. He's got a number of questions. So
okay.
his first, let's see, you want to know how applicable programs are to any state. Example, one moves from New York. Mm-hmm. So I'm gonna let you, because he's got like 4, so let's just go with those.
Okay, so Lawrence, that's a great question. The majority of the plans, again, you have to read the policy, but the majority of plans will follow you across the state. Or across the country, excuse me. Some of them will even follow you outside the country, but you know, those are the types that you really have to look far and wide for. But again, it's dependent on policy to policy. The ones that I represent allow you to cross state borders.
Another question he had is actually something I was thinking about, is on sharing benefits and caps between spouses and partners. Mm-hmm.
You know, that is available on some of the plans. That was a thing with the New York State partnership that happened quite a bit. The newer plans are more specific to individual even though you're married, it's specific to individual, but some of them will backfill. So, you know, if one spouse only used a year and another spouse needs 7 years, some of them will backfill. So there is an opportunity to get that as well.
Oh, great. This next one is a question that it might be he calls it an elephant in his room. It says, given the fact that given reimbursement rates, the actual pay to CNAs tends to produce a lot of mediocre CNAs, even in reputable organizations. How does insurance change that? And can you just kind of talk? Can you explain the question a little bit to us
Sure.
novices?
Sure. So I think what Lawrence is referring to is the CNAs are the certified nurse assistants that are coming into the homes or maybe in the assisted living facilities. And that was one of the things that I was referring to in the presentation, that some of the policies require you to go through a particular company to hire the CNAs or the aides that come in. And some of the policies allow you to decide who you want to hire. And again, that's one of those things that you have to be checking before you sign anything to make sure that you are comfortable with how the plan is going to make you get care for yourself or for your loved ones.
The last question he had was on longevity of plan benefits. There's expectation of when and how an event takes hold and how long it endures versus the outliers, people who end up in a condition for prolonged periods. So I don't know exactly what his question is there. Maybe.
Yeah, well, Lawrence, let me know if I don't answer it for you, but most of the plans have coverage for you for about 6 years. After 6 years, it's pretty much been exhausted with the plan. And then, then you have to make other arrangements, unfortunately. But again, and I think that's, hits that outlier thing that you were talking about, because, the stats are saying most people need care for 3 years. So if the average is 3, the policies are giving you 6, that should do a good roundabout. I know that doesn't cover everybody's situation, but it covers the majority.
Okay, our next question comes from Jerry Gears, who is an Aquinas Hall of Famer, class of 62.
Congratulations, Jerry.
His classmates rallied a great nomination for him a couple years ago. All right, Jerry was saying, how many ADLs must be deficient before LTC can begin to kick? It was 2 or only 1. He wasn't clear. He has an unlimited time period LTC coverage. For unlimited time coverage, LTCs, are they best for Alzheimer's? Our companies, will they reduce the insurance costs if they opt in for 8 years? That's a lot to handle, but again, I don't know all those acronyms, but I'm sure you do.
Yeah. So way to throw out the acronyms, Jerry. Love it. So just a reminder, long-term care is referred to as LTC because long-term care gets a little bit of a mouthful. ADL is those activities. Oh gosh, now I can't even remember what it means. Activities of daily living. Okay. And most plans, again, if you already have a policy, you need to go back to your policy, go back to your broker. They should be explaining this to you. They got paid a commission, make them work for their commission. All right. Most plans say that you have to have 2 of these things signed off by the doctor saying that you need assistance before the long-term care plan will start. Okay.
Our next question is from Amy Weber-Riss, class of 92.
Hey, Amy.
Of course, she's younger than you and younger than me. I'm not sure I like that, but her question is, understanding that being on good health is paramount, is there an age recommendation, which I can't think you gave a range, but so you should be looking for a plan. I was going to ask for a little bit more clarification on that myself. A financial planner once told her that obtaining LTC insurance would be important before you turn 50. Is there merit? Yeah, I thought, and I just turned 50 this year. So when you said that, I was looking for clarification. So I'm on the young end, but I'm thinking, boy, that seems early.
Yeah, I like between 50 to 65 because that's usually when people have a little bit more disposable income to be able to pay for long-term care, right? The average age of an empty nester, so they've, everybody has flown the nest and all college has been paid off, is, I think it was 48.9 years. But so, we're at 49 years old. At that point, you're going to have a little bit more money to be able to put towards your long-term care. Before that, you're paying for the kids and the nickel and the diming that, is going on for everything that's happening in the sports. You're paying for college. trying to purchase a long-term care plan at that point just often doesn't fit within the finances. Also, yes, you could start having some medical issues when you hit your 50s, but most of the time people are still pretty healthy between their 50s and their 60s. So I don't think that it's bad to wait until you're in that 50 to 65 range.
Actually, I'm going to ask a follow up on that. Is there a time that's too late? And I understand, obviously, the older, worse health you are, but is there a time that you'd say just, don't worry about it, or is that not really true?
Yeah, I mean, a lot of plans will stop offering at about 78 or 80. There might be one or two that you can find out there, but certainly as you get closer to that 80 mark, you're really not going to find anything that's, number one, going to be reasonable in premium, and that you're going to be able to utilize, because at that point too, most people have a lot of health issues. So that's going to drive up the premium as well, and could again just make it so that you can't qualify.
Okay. Our next question, they must be, this class may have, maybe they had a meeting before this. This is also a class of 1992, and another Hall of Fame member, Christopher Schultz, asked,
Hey, Christopher.
Can you do a brief description of how disability insurance differs from LTC insurance?
Well, so I don't sell disability insurance, so I'm not going to be able to do it quite as well as somebody who does sell it. But disability insurance the purpose is to help provide income when you're disabled. It does not typically pay for nursing home, aides in the house, that type of thing. Okay, so again, it's two different insurances meant, to do two different things.
Okay. This actually comes from an anonymous attendee. I'm not sure if they're really anonymous or just didn't put the name in, but they had heard that. Yeah, there's someone's listed as anonymous. They heard that LTC insurance only covers about $100 a day. They want to know if that's true. And if not, how much on average does it cover daily?
Yeah, so that is all dependent on the policy that you purchase. And you get to be in control of that. So you can, buy a policy that is only going to cover $100 a day. You can buy a policy that is going to, pay triple, quadruple that. Again, there's a lot of flexibility when you go ahead and purchase a long-term care plan. So it's not a one size fits all.
Okay. I would say there's a lot to take in, and looking at some of the people on the call, including myself, I think you mentioned, I'm looking at this picture here, and you're talking about age 50, starting to look at that. I think that's a lot of people that are in what we would call the sandwich generation. You're still kind of taking care of your kids a little bit, and now you have to start taking care of your parents a little bit. And that just seems to be a real tough place to be.
Yeah.
Do you work with a lot of people like that?
I do. Yeah. We try to get the word out much earlier, and when people are in their 50s, and now that people are retiring a lot earlier, people aren't waiting until 65 anymore. They're retiring 53, 55, and so that's always a conversation when they find us because of Medicare. In a separate conversation, we always talk about, okay, so what's the plan for long-term care? And, if there isn't one, that's when we really have that hard conversation of saying, if we don't plan, this could be something that really affects everybody in your family circle.
Okay. Yeah. One of the things I do here at Aquinas is I work with people in their estate planning, their plan giving, and talks about wills and things of that nature. And I think a lot of people don't like to think about that. We're not necessarily 18 in math class anymore, feeling that we're invincible, but we feel we have got a long way to go. It's a negative thing to think about, and it's just people kind of don't want to think about these things. What advice would you give to somebody who says, I'm not ready for that yet, or it's a long ways down the road, or never going to happen to me? I'm in great shape. I think I unmuted you. I think I muted you instead of myself. You're going to have to, there you go. Oh, one more time.
There we go.
There.
Yeah, so, that is often the response from many men. Okay, so women usually get it. Women are like, yeah, I want to be covered. I want to be cared for. Women know that they usually are living longer. So they, if they're married, their spouse is probably going to, expire before them. It's usually the men who say, oh, I don't need this. I'm going to stay healthy the entire time. Or they just take that abstract view of, well, my family's going to take care of me. My daughter will take care of me. My granddaughter will take care of me. And it's having that hard conversation with that person to say, well, what's going to happen to your daughter or your granddaughter's life if now all of a sudden you need 24-hour care and she can't work anymore? Are you going to have enough funds to be able to replace her job? Is she going to be able to have enough time to care for you and her family? What if, she's making decisions and your other children don't like those decisions? What is that going to do to the family dynamic? So having those hard conversations now is really important. And I know none of us want to talk about it. I remember about 10 years ago, my dad taking me aside and being like, here's where I keep all the important stuff. And here's where my life insurance policy is. And here's where this is. And here's where all the checking book information is. And 10 years ago, I did not want to hear it. I was like, Dad, you're healthy, you're robust. These are things that I don't want to be thinking about you passing away. But it was so important to do that because now I know where everything is. And it goes the same thing for the care as you move forward in life.
That's good advice. I think you've given all of us a lot to think about. Okay, another question from Chris Schultz. How much do underwriters scrutinize health? Do they overlook minor issues, or is each company different?
Yeah. So Chris, great question. Each company is different, right? So being able to work with a broker that has a lot of different plans available will be able to help individuals, basically niche into a company that might be a little bit more lenient on, blood pressure issues. There's other companies that say if you had cancer, you have to be clean for 5 years before you can apply for this and take a look at it. I had a client who was actually, he was 65, very healthy, actually ran, and during the underwriting, it came up that he had gone to the doctors because he ran, he had pulled his Achilles tendon, and they were actually giving him a hard time about that. We had to have the doctor, write a note saying this is not, this was a one-time thing. This is not continuous. So, it's health insurance, it's insurance, and insurance companies are looking to insure people who don't need to use it, right? That's their whole business model. And our whole model when we purchase insurance is I want to be able to get the best rate and be able to get the best returns. So it's finding a good balance between the two that is the right benefits for the individual.
Great. So actually, just a comment from Jim Montrose, class of 85 in Texas. And off the top of my head, I don't know this, but it's some weird name like Wachitachi. So I'm not even going to try to look it up. But he just wanted to say thank you so much for the presentation. Answered a lot of questions that he and his spouse had. I agree. I think there was
Jim.
He answered a lot of questions, but he also gave us a lot to think about. How if we have more questions or need to kind of spitball some things, what's the best way to, if you could, go back to the beginning. I'll tell you, I mean, I know a couple people that have talked to you and had their parents talk to you and only positive comments. This is not, this is me speaking. She is not selling you a product. She's not, it's not how that, it's definitely a little different situation. It took me a while to figure it out, but it's their best way is email, phone call. What's the best?
Yeah, email definitely will get a faster response, but if you call, you can talk to Kathy Valentino, wife of Christian Valentino of class of 91. And she'll get you on my calendar so that we can, talk it out as well. Like Jay said, we're here to make sure that you have the best plan that makes sense for you or for your family. And so if we feel that, what you currently have is the right thing, we're going to tell you that. But if we think that, you need a little bit more, we're also going to tell you that too, right? We're going to have that hard conversation with you.
Well, that's great. This was, I think, a very informative webinar that I hope helps a lot of our alum and their families. As I mentioned at the beginning of this, if you like this, let us know. If you have suggestions of areas like, I'm just throwing things out there. I really need to buy a house. I have some tips, or how do I sell a car, or how do I invest in this, or I need advice on that. We have great alum with great experiences and knowledge that are willing to help. So if you have ideas for future webinars, let us know. You can contact the school. You can reach me, letter J, Polston, Polston, at Aquinasinstitute.com. By the way, Jim said me phonetically how to say it, Waxahachie. So I was close, Texas. So that's okay. Thanks, Jim. And again, we're getting people from all over the country. So we're excited to do these webinars. Vicki, any last thoughts?
No. Thank you, everybody. I loved all the questions that really helped to round out, because if you had the question, somebody else probably had the question as well. So thank you for participating, and reach out if you need anything.
Thanks, Vicki. Thanks, everyone, for attending. We'll have another one scheduled in the near future. And as always, Aquinas evermore.
Aquinas evermore. Thank you, Jay.
Bye. See you, Vicki.